Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 23rd of February, 2022. Thanks for joining me this morning. A quick mic check, if you will. This is episode number 2177. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing a market that has a mild risk on sentiment. The posture is that we are positive on the day. We're seeing a pop higher, led really by cryptos, ETH being the champion this morning, followed by Bitcoin. The European market's also recovering nicely. The Euro Stoxx 50 up 140 basis points. The DAX up 116, 17 basis points. And then following that is the NASDAQ, 106 basis points. Crude was down most of the morning here and is recovering slightly. Crude crossing the settlement price from yesterday and is trading slightly positive. Overall, the situation, the market. So I'm trying to not editorialize here too much, but essentially what this is this Ukraine situation, Ukraine-Russia situation in terms of the market is a bit of a distraction. Excuse me. Is a bit of a distraction from the fact that we have some real risk overhangs from a monetary point of view. So as soon as there's any positive news at all, you'll find the market repricing much higher and very, very quickly. Russia has pulled its diplomats from the Ukraine. It has dropped the Russian flag from the embassy in the Ukraine and has moved out. The Ukraine has recalled its citizens from Russia. However, the events overall are cooling. We're seeing, really what's happened so far is that regions that have already somewhat been recognized by Ukraine as independent and pro-Russia since 2014, since the Crimea seizure by Russia, those regions are being recognized by Russia as separate regions. So nothing has really changed. Russia has pushed in some of its military into the region as peacekeepers, and that's yesterday that was seen as an incursion by the Russians into the Ukraine, but really that's not the case on the ground. What I'm hearing is that this has been the situation all along. So Russia's been sanctioned in the harshest way possible so far for the amount of disruption it has created. Russia has not moved into sovereign Ukrainian territory as defined by the Ukrainian government itself. In other words, setting aside that they're recognizing that these areas that Russia's operating in are separatist areas anyway. So far, they're kind of holding back on the bigger sanctions across Europe and so forth. But POTUS came out yesterday and talked about some of the steps they've been taking. I think that overall, the amount of sanctioning that can take place is quite limited at the moment. And it's kind of par for what's going on is how I'm seeing it. So the market is responding in a positive way because it does, despite all of these events, there really isn't all that much risk. Now, the market doesn't like risk in either direction. The market doesn't like risk to the positive side or to the negative side. It just doesn't like the unknown, and the better position is to close positions, go into safer instruments such as treasuries mainly, and some metals and things like that, commodities. But overall, that's being unwound. You can see that there's a slight move down by the metals again and the treasuries. Crude is coming back up. There's also the Iran piece in play here. So overall, it's just a lot of noise. This is just simply a ton of noise, and it's not really having a material effect on the ground as far as I can tell. And I'm reading this from many different sources, independent sources and so forth, and it just seems that way. Anyway, let's get past this. We do have a lot of earnings. Like I said, this week has tons and tons and tons of earnings. The key one today being eBay, which is after the market. Fidelity does report as well as Booking Holdings, but overall, nothing too impactful. Looking at the S&P has an elongated bounce with a very odd looking ledge at 43.35. 43.35 has had a ton of delta traded at that price. We saw a lot of icebergs at 43.30 and 35. And so 43.35 is the point of control currently, but it's done so in a very, very odd shaped distribution. And there is no distribution. There's just a ledge there, a big old shelf in the profile. We're trading mostly sideways with the inventory being 100% long. Essentially, we settled yesterday at 4,300. We had the close settlement, the official settlement, plus the official settlement, plus yesterday's point of control, all at 4,300, and we have not touched it since we reopened. Therefore, the inventory is 100% long. The range is 36.5 points, which is within the first standard deviation over the last 252 days. So statistically, this is a normal range. It is, however, higher than the mode of 23.5, so it's highlighted. So that's the situation that we have. The calendar doesn't have much on it, but I do suggest strongly that you keep your news feed running, especially if you're with Convergent Trading. Please make sure your CT news feed is up and running. There's a lot that's coming across all the time. Really, we're back. The market's very quickly going to go back to paying a lot more attention to the Fed and what's going on with monetary policy than anything else. Remember, inflation is a monetary phenomenon, not a fiscal one. So it has nothing to do with the Build Back Better. It has nothing to do with the infrastructure plan. Inflation is really driven by monetary policy, the amount of dollars that are floating in the economy. So that's where that stands. Looking at yesterday in our review segment, yesterday, a lot of rotations, pretty tough grind through much of the day. Let me switch this to a little bit higher time frame because there were a ton of rotations yesterday. Quite a few opportunities, but through portions of the day, it was a tough read. If we look at, let me just select, come on. If we look at what it has done here, we can see that in the morning, we did have an open auction. We dropped, we pushed up, and we have our first impulse up for the day. We had our first impulse down, no continuation. We had our first impulse up, so expecting it higher, expecting it to come back to Friday's settlement. And then we had some pretty good setups in here on the push higher. We pushed to the IB, we made the IB, we one-ticked the IB. It's very tough to see. You have to have pretty accurate data, but we one-ticked the IB just after we created it, and then we immediately sold off. And then what we had is a really difficult trade right in here. Essentially bars that are just overlapping each other. And so if you traded breakouts, you probably got stopped. If you traded pullbacks, you had to really sit for a while to see anything, any payout, because the lows were being taken out a handful of ticks at a time, all the way down this mechanical grind that was yesterday. And so I didn't see a very clear opportunity in this mess right here. It got cleaner on the way up, although we had these flushes and spikes. There's a lot of volume going through. Um, and we could see that there's quite a bit of lifting going on the delta once this bottom was put in. But overall, a pretty tough read in yesterday's action. So if you found it hard to kind of deal with, it was hard, because even in these situations where you're looking, you can see we're below mid. You can see us pushing through. You can see us pushing through the low, yet we have these spikes that take out our stop before continuing low. It's these up spikes that take out the buy stops on short side, since we want to be on the short side before it continues. So yesterday, as I said, yesterday is a real ripe with FOMO type of action, and a lot of really emotionally sucking you into the trade. So if you committed a lot of mistakes yesterday, I would very much think that that was par for the course. Okay, so we covered about 97 points of range yesterday. We had a multi-distribution profile. There was really no real consensus here. You can see the 4,300 had a very prominent point of control. It also had settlement and a close on top of it. We closed outside of the IB. The IB was 58.50, but the high was 58.75. So we did one tick that high, and we had a one tick failed auction to the downside. I did not see that at the time. This is a pretty aggressive sell signal if you saw it. So that's where we stand. Yesterday traded mainly below Friday's low. And again, I removed Monday's action because it was a holiday. But we traded pretty much the entire session below Friday's low. We did push into and through the 42.85 and the 42.76, which were key areas down below. We did tag the overnight point of control. We did take out the overnight stat on the upside. We tagged the overnight point of control. We tagged the prior settle. So all of the statistical plays, the statistical setups yesterday were tagged and played out. But other than that, the actual structure of trades was not so clear to me. So it was very, it seemed like a significant amount of risk for the reward in terms of participating in yesterday's action. Looking at what has happened since, so you could see that, this is yesterday right here, multi-distribution, very sharp point of control. And then we pop higher right after the cash close. We pop higher and we remain above settlement for the entire session. And then we have this weird ledge right here. In fact, I think it can be seen easily here through, let me just move this over, through the Edge Pro X platform. You could see that this profile was just an odd looking thing right here. So let me show you this. So this is my execution platform. Also, I just like to use it for short-term charts. You can see this incredible ledge right here, which is forming the overnight point of control right here. See that? Just a massive drop off, a very clear iceberg going off in there at the 35. Just a lot of trading into that 35, and it just couldn't go through. And we have this big drop off, and so we end up with this ledge, which is just an odd play here. I'm not going to use it as an over underline for today. We did poke through. We poked through it. We've traded above it. And then now it's just holding steady here at 35 with a lot of volume going off. It just seems like there's a lot of money movement happening, taking place in in this region. So, but overall, the action, when we look at the action overnight, it's relatively noisy. This is a 1 tick by 8 point figure chart. There really isn't much you can glean from the overnight session, and given the way the profile shaped in the overnight session, we're coming into today's session with really just kind of a very little information to go off of, or very little clarity to go off of. So the name of the game today is to just wait out, see what it does. Here's what the market profile chart looks like. You can see even with the market profile that we're moving lower. The point of control is moving lower and lower. We're accepting these lower prices. It's going to be key for us to turn higher and start taking out these lower highs to see a reversal taking place. Yesterday we did manage to get to the prior day's point of control in the market profile. And if we start to move up and take out this 1 tick failed auction, if we do take that out, we'll find ourselves pushing to that next area, the 43.90 and the 4400, back to 4402 quite rapidly, 4402 being the key resistance in this area. So I expect this to turn and push higher fairly well once we find a bid. And it looks like we're working on one. It looks like we're trying to find one. As of right now, we are trying to hold higher. So our overnight point of control is higher than it was yesterday. Yesterday was 42.67. Today it's 43.35. So that's where we are. There's not much more to offer here. So let's take a look at what's expected for today. Let's bring back our levels. Okay, so let me shift this a little bit. Yeah. 2 sigma, 1 sigma. Okay. Okay, so what am I looking at for today? The expectation for today, we have relatively weak evidence of this, but it looks to be shaping up this way. We're shifting the 4,300 up. We are trading around or just above the full session VWAP, full session mid, which are at 38 and 27. I'm expecting for us to drop. The inventory is 100% long. I'm expecting for us to drop on the open, pull back to this 43.21 area, which was Friday's low, last week's low. Okay, it showed some resistance yesterday afternoon. I'm expecting this to be support in the 43.21. So this is a key trading area here, back up above the magnet, which is 43.43. This is the MC point of control, and it's colored purple there for the magnet. And then I'm seeing us get back up to 43.68. So if we can turn around at 21.68 is very much attainable. That's only 47 points of range. We're expecting about 50 on the day if we rally. The extended target is right up here. This is the key resistance currently, as I mentioned, 44.02 if we start to rally. So we would have to take out the 58.75. 58.75 gets us to 68.75, and then from there we may be free and clear to 44.02, and we're likely to start forming a base for a rally. That's scenario one. It is a rally scenario. If we fail to do so, and if there is more news flow that is negative, that is risk off based, then I'm looking for this thing to push the overnight high, consolidate at the 43.43. This is a big MC point of control, and if it fails through, expecting it to hop around the 21 and then immediately push to 4,300. Tag the 4,300 for yesterday's MC point of control and start working itself through the levels to the downside. The setups for scenario 2 is a push through the 45.50, failure to get through yesterday's high at 58.75, and it starts to come back in, and then we see a weak pullback. The weak pullback is where the short trigger is. We're looking for a weak pullback after testing higher. Look for the short target 21. So the short might come on in the 40-45 region, and then look to target 21, giving us about 15-20 points of range for about a 4-point stop. Pretty good R factors. And then from there, if it gives up to 21, hang in for 4,300. That's the next key area to test below. Okay, so we do have the overnight low of 43.09, but really I'm looking for the 43.02 to 4,300 as a target. And if it cannot hold the 4,300, then it's free and clear down into the 42.75 area again. Okay, that's a lot to take in, I know. Overall, the delta overnight is positive. We had a nice buying climb yesterday. We saw a fair amount of blueprints on the tape, buying prints on the tape, and I'm expecting that to continue to today. So I really am expecting scenario 1 to play out into 68.75, and potentially if we have some good news or any relief, then we're looking to push to 44.02. That's what I have for you for today. Remember, this is a more volatile environment. I do invite you to watch this video from this live cast. If you did not attend, I share a lot about statistics and how I'm forming these structures in a high volatility environment. This is actionable information. Remember, everything I do is the same as what I would do for my prop traders as I do for you. So get in there, look at how things are, how trades are shaped in terms of R factors and things when the volatility is high. Volatility is currently high, so this is an important video to watch. Go to ct.pro/trading-volatility. Okay, check it out, and I'll catch you tomorrow morning. Take care.